IRS Form 709 is the United States Gift and Generation Skipping Transfer Tax Return. You file it when you give gifts to any one person that exceed the annual exclusion amount, which is $18,000 per recipient in 2024. Gifts above that amount must be reported, though you generally will not owe gift tax until your lifetime giving exceeds the lifetime exemption, which is over $13 million. Form 709 is filed separately from your income tax return and is due on April 15th. Part 1, Section 1 collects the donor's information: your first name, last name, and social security number. Enter your address, citizenship status, and whether you are filing a split gift with your spouse. If your spouse agrees to split gifts, each gift is treated as if each of you gave half. Schedule A is where you list each gift. For each gift, describe the property transferred, the date of the gift, the donee's name and relationship to you, and the value of the property on the date of the gift. Use date of gift fair market value, not what you paid for the property. A qualified appraiser may be needed for non-cash gifts like real estate or closely held business interests. Any taxable gifts reduce your remaining lifetime exemption. The annual exclusion gifts, gifts to your spouse, and direct payments for tuition or medical care are not reported. Keep valuation records in case the IRS questions the gift's value. Fill yours out free at FormsPal.com. This is general information, not tax advice.